Hi, just a short video on trading the three indicators that we supply on TradingView, and also using our data that we supply on our NakedDelta site and the NakedDelta matrix. It's got three indicators here. They're all liquidity based indicators. They show you three things. The time-laid one shows you the thickest line is the closest surface liquidity, the thinnest line is the furthest away. A bit like a moving average. The closest is the period that you're looking at here. So the 3 period is the surface liquidity. That shows you there's selling going on at the moment here in the red, and green is buying, so there's some green buying on. The irregular liquidity shows you, this middle one here shows you the liquidity normalized over a 15-day period, just so you can see the different days of the week, and it just irons out the irregularities or the nuances of the different days of the week. And the last one, which shows you overall liquidity, shows you how tight something is compared to different periods. We can see up here it's very loose as we're in a selling period, and as we go down into more buying, even though the price is quite static, we see it tightening up as before we went up into this recent jump during earnings. And during the earnings I did make a call the day before, which was probably a little bit early, just when we had this very loose liquidity, which I really thought that this might be bearish. You really should wait to see what happens in liquidity when we're looking at earnings in this last few hours before, or last couple of days before the actual earnings takes place. And you see it really greened up here and really tightened up quickly before jumping up. So if I just zoom, that was the zoom out. The zoom in I do in 2 periods. I like looking at the possibly the 1 hour or the 30 minutes just to see what's happening, and we can see this slow tightening happening. We can see this accumulation period here in liquidity sentiment. We can see it happening here in irregular liquidity. Irregular liquidity has the 50% line, so selling is above the line and buying is below the line. So we could see this strong bit of selling that maybe a little bit hesitant about, or made me think that we were going to have maybe a dump during that period. It was a period of high gamma in PepsiCo, or relatively high gamma, which I thought might push it down. The gamma was caused by the new open positions in it. Eventually, when we go down to trading, when we're looking at something, you're probably going to buy and invest. You're not going to be trading this on a daily basis. 15 minutes is about as close as I want to get it. If it's an investment, it's just too close to really look at the detail. Maybe for entry, you might like it, but you're better off staying out there at that 3 hour or the 1 hour period, just so you get a better overall look. If we just go and have a quick look at the open interest and the data that we supply on the NakedDelta site. Here I've got open DPI, which is buying and selling on the OTC markets. That's the over-counter markets. This is really done by big funds and dealers. Option dealers go there so they can buy the centre of the spread. They don't have to go into the lit markets and pay the ask on at any time. Just gives them a better average, so it's heavily used by them. What it does is give us a really good idea of whether things are buying or selling. So we can see this is a selling period here, or a hedging period here. This is a hedging period. It's following the price. When we see these periods of high buying, so high being a higher number here in the DPI, but we have a flat period of price, we consider this to be accumulation. And so we've seen a couple of good periods of accumulation, and even here we can see a little period of accumulation going in, and this is the one that we recently saw before we saw this bump up in price. Having a look at how that looks in the data, I've got a filter on it. Here is the calls, here is the puts. You can see we've come in until the 6th of June with very heavy hedging. That's come off. If we look at the 6th of June on the chart, we've come into June, so somewhere just about here the hedging has been reduced. If I just have a look, we'll put on the gamma, and we might take off that buy indicator, and we can see this. This was my concern with the gamma. It was quite high. I thought that it might knock the price down. Traditionally, we have seen higher periods of gamma, but considering that it isn't a very heavily traded stock, I thought that might have been a bit of a ceiling. If we go down and look, we've had that taken off on the 6th of June, and then we've had a build of calls through that period. This is the accumulation that we're talking about. We've gone from a base of about 30,000, dipping down to 2,000 in the money. This has got a 50 delta hedge on it, and then we can see we've started at 64,000 in puts in the money and gone right down to, on the 24th, down to 44,000. So if we went to the 24th of June, somewhere here, we can see those puts have really been taken off. When they're taken off, we get a little bit of a hook in the market as the market makers shuffle around before we've seen it take off, and then we've got that great price appreciation. So that's how we use the open interest data to support our want to buying. The couple of simple indicators for buying that we have in here is we have two. One is just the buying between DPI and gamma. It shows us the good points to buy. They're not necessarily, the size of these buys aren't related to the possible gains, but you can see they're pretty well in line with gain periods after them. We can see here we've had some good buying. Again, we can see here we've had a good buying period before we've had a jump up, even though that's quite small. If we zoom out, we can see that these were quite big in reflection on what was happening at the time. The other buy indicator that's very interesting is liquidity buy indicator. Just adds an extra dimension, and we can see that it shows us these buy opportunities, and they're not necessarily all right. That's why we use the other indicators to give us a better idea. And then we also realize that some are winners and some are losers when we get all of our signals lining up, and so we always hedge into these positions. But here's a buy signal working. Anyway, I hope you've enjoyed this little video of using the three indicators and our open interest, gamma and DPI, as well as our indicators developed with open interest to show us some detail there. Have a good weekend, and I'll see you for the week's trading starting back on the 21st of July. Thank you very much.